Hello, happy people. Good afternoon to you. I'm excited to welcome you to another video tutorial. In this video, we shall be taking a technical standpoint on the US oil commodity as we want to be looking out for trading opportunities for the new week. This is a follow-up video to my previous analysis on this commodity and talking about follow-ups. I would like us to have a quick look at what happened last week. For those who are not part of our trading journey last week, I would like you to see how we took advantage of the trading opportunities that the market presented to us. So, at the beginning of the week started on a bearish note as we saw selling pressure begin below the $80 level and because of the fact that we had a structure around the 79.50 cent level, we used that level as a support level for the week. And we were looking out for a signal of where price action will be going at either the breakdown or breakout of that structure. And in fact, we had a breakdown of that level, giving us an opportunity to sell. Though we had price come back, taking us out of our position at break even, so we re-anticipated another entry with a sell stop order below the $79.50 level. Our position was triggered, price action continued to the downside. We moved our stop loss accordingly to lock in some profit as we saw buy pressure begin to resurface around the $79 level. And as a result of this, we identified a trend line and we said if price action breaks out of this trend line, which also shares a confluence with the $79.50 level, we will be getting our buy position triggered. And this is exactly what happened. We saw price action break out of the trend line, retest to structure, and our buy position was triggered at that point. Then we continue to ride the move all the way up, and with the hopes that we will be having another position at the breakout of the $80 level. And that was exactly what happened. Price action broke out of that structure. We advised that we move our stop loss accordingly to lock in some profit. Then afterwards, we saw some selling pressure come in to take us out of our position with about 90 pips on two positions that we had running. Then price action came back into our entry point at the $80 level, so we were anticipating another buy position. And to make things a little bit easier for us to see trading opportunities here, we were able to scale down to the 5 minutes time frame where we identified a simple setup here, the bearish trend line and the reversal pattern at this point to guide our trading activities with the hopes that a breakout of the $80 level will give us another opportunity to buy the US oil. And that was exactly what happened. Price moved significantly well in our favor. Then we looked forward to adding more position at the $81.50 level, breakout of that structure. And as you can see, price broke out of the $81.50 level. And when we started noticing selling pressure on the $82.10 level prior to the retail sales data, we positioned ourselves to join a decline at the breakdown of the $81.50 level. So this was the instruction in that regard here. Secure all buy positions and get ready for a bearish move at the breakdown retest of the $81.50 level. And that was exactly what happened. We saw the sell pressure come in, break down the $81.50 level, and we rode the move all the way down, added more position at the breakdown of the $80 level. Then we started seeing some buy pressure coming again, taking us out of our position as we had moved our stop loss accordingly. And we had another buy position running. So it was quite an interesting and profitable week for us on the US oil. If you would like to see how we took advantage of this opportunity, I will be linking you to that video, which has the daily commentaries in the comment section of this current video. And if you are watching for my trading view, sorry, if you are watching from my YouTube channel, you will be seeing it at the top right hand side of my screen. So now going back into the details of the daily time frame here, remember we had this bearish trend line figured out at the beginning of the year. We noticed how the sell pressure continued to respect this trend line. So we connected the series of lower highs there to give us that trend line at that point. And since then, price has been that trend line has been guiding bearish momentum. However, I would like us to look at what has been happening here since the later part of last year, stroke this month. So what we have here on the daily time frame is quite interesting, as we saw how the $80 level had been a major determinant of price action, at least in the last couple of months. We saw how that level had been a strong selling niche for participants in this market, as you can see here. Sorry. As you can see here, it has been a strong selling niche again here in the month of December. We saw again here what happened, as that level also was a strong selling niche for participants in this market. So at the beginning of the year, we saw the sell momentum, which we took advantage of. Then we also saw a consolidation below the $75 level, which we also took advantage of this move as price broke out of the $75 level a couple of weeks ago to bring price back into the trend line, which also shares a beautiful confluence with the $80 level. Remember the trend line that has been holding bearish momentum. As you can see here, price action. As soon as price action got into the structure, we begin to see some consolidation phase around that area to further emphasize the level of indecision that was in that market at that particular point in time. So whenever we have an indecision like this, we want to wait out for a breakout or breakdown of that channel to give us a signal of where price action will be going. In addition to this current structure here is one beautiful reversal pattern I was able to identify after looking at this impulsive move that started around the $93.50 level, crashing into the $70 level, the lowest point price action has been in the last 6 months. We saw the first touch price came into the $80 level. We saw the second touch here at the $72 area as price action was unable to break the previous low, hereby giving us a reversal pattern in the form of a double bottom structure. And whenever we have a reversal pattern like this in the form of a double bottom structure, the next thing we want to be looking out for is the neckline of that structure, which we shall be using as a yardstick for trading activities. And if you look at the neckline here, it shares a beautiful confluence with the $80 area, which has been a major determinant of price action in the last couple of months. So with this situation we have here, a breakout of the $80 level should be a good opportunity for us to buy. And as you can see here last week, we finally saw a situation where price is trading right above the $80 level. So at this point in time, are we going to continue to see bullish momentum here where price action will continue to find higher highs into probably the $85 level, or the bullish trend line here, the green line on your screen at this point? Or are we going to be having a situation where the breakout here will turn out to be a false one, where another wave of bearish momentum again will begin below the $80 level? So these are the views we are going to be looking at as we scale down to a lower time frame. So on the 4 hours time frame, I was able to identify a simple setup that we can use to guide our trading activity for this week. And here we are on the 4 hours time frame. So this is the 4 hours time frame here. And hold on a second. So that is the demand zone initially at the $72 area. Then we have a bullish trend line here, and that is the very important key level at the $80 level, which we identified on the daily time frame. Now, if you look at the structure here and look at what has been happening in the last couple of months, you would notice that price has been caught within a consolidation phase between the $82 level and the $72 area. So the $82 level here has been a strong selling niche, as you can see, since the month of November, and price appears to be approaching that level. In fact, price is around that structure at this point. So the $82 level is going to be a key level we shall be looking forward to in the new week to see how price action will react to that structure to decide if we are going to be buying or selling at that point. So what I want to be looking forward to this week is if price breaks out of the $82 level here, that is going to be a beautiful sign that a bullish momentum has come in at this point as price action takes out all the sell positions here, give us some liquidity for a bullish momentum, which we will definitely be seeing on our lower time frame, has a buy pressure above or around the $82 level to join that bullish momentum to the upside. However, if selling pressure continues again, probably respect that $82 level one more time, as it has always been doing before, A breakdown of the $80 level, which also shares a beautiful confluence with this trend line here, could be a good signal that sellers are still very strong in this market, and a selling pressure below the structure will be welcoming additional position to our existing trade to the downside. So these are my views here on the US oil for this week, but be rest assured that I will be jumping right in the comment section of this video to give you an update on what my expectation is going to be like for the new week after monitoring how participants in this market will be reacting to the current structure that we have here. I hope this video has been of immense help in making your personal decision on the US oil, and if it did, kindly support this project by clicking the like button. You would also want to follow me on my TradingView platform at Darksherry, spelled DARCSHERRY, so that you don't miss out on the regular updates I normally share in the comment section of all of my videos. Thank you for watching this video, and I look forward to seeing you right in the comment section of this video as we get prepared for the new week. Do have a wonderful evening. Bye bye.